Thank you, Randy, for that really warm and wonderful introduction. I'm very happy to be here. Ottawa is really a second home for me, in part because I see so many of my longtime friends and colleagues here today. And so Ottawa is a very special place to be for a number of reasons, which I won't go into at this moment, but I'm just very happy to be here, delighted to be at Carleton with Randy. Randy was very modest. Randy was my TA when I was an undergraduate. And because of Randy's great kindness, I'm here today still, because he gave me an extension when I was not a very focused student. But I think he may have seen some seed of potential of some sort. And so Randy, and Randy was my professor as well at York. So I'm really happy and thrilled to be here today. I'm very happy to have this chance to talk to you about this book that I've been working on. I've been working on it flat out for about 3 years now, working and reworking it, trying to get it right. I hope I'm very close to that now. Just by way of introduction, it's something, the internationalization of China's currency is a topic that I've been working on since 2008. So it's a very kind of sexy, hot topic these days. Right? As people know that the renminbi now has climbed up the ranks of international currencies to the number 5 as a payment currency in the world. Right? It surpassed the Canadian dollar and the Australian dollar to reach number 5. Sits a little bit behind the Japanese yen Japanese yen at number 4, the pound at number 3, the euro at number 2, and the dollar at number 1. Now, the renminbi, even though it's in number 5, it's still a distant 5 from where the dollar and the euro and other currencies. And so I'm not here to say that the renminbi is going to overtake the U.S. dollar tomorrow. Nothing sensationalist like that. The importance of the U.S. dollar, it still is in a commanding position in the international monetary system. And even through the global financial crisis, in some ways, people are expecting its position to be weakened. But in fact, the currency strengthened, the U.S. currency as a safe haven. Its role actually, many investors flooded into U.S. dollars, in fact, rather than running away from it. And so I'm not here to try to suggest that the renminbi is here to, is going to supplant the U.S. dollar overnight or anything like that. But what I will say is the renminbi, if you follow this closely, has been making really significant strides, starting from a low base. Just to give you a sense, for those who don't follow this topic every day, renminbi now is number 5 ranked payment currency. It is the second ranked currency for letters of credit. So when people write letters of credit for trade finance, the renminbi now, according to SWIFT data, which perhaps doesn't capture a lot of the euro transactions as far as letters of credit, but nonetheless, according to the data that we have, that SWIFT data, the renminbi is now number 2 for letters of credit. And according to the latest statement from the Chinese central bank, from Hu Xiaolian, the deputy governor of the Central Bank of China, the renminbi is now the number 7 ranked reserve currency. So even though the renminbi isn't included in the what's called the SDR basket, the special drawing rights basket, the basket of 5 currencies or 4 currencies around which the IMF has this special drawing right product. Even though the renminbi is not included in that currency basket, and therefore isn't always considered, it doesn't have official status as a reserve currency. Nonetheless, many central banks in the world, more than 50 now, have renminbi in their holdings as part of their overall reserve holdings. And so, based on these kinds of indicators, clearly we can see a trend whereby the renminbi has been making significant gains, though starting from a very low base. And as a researcher, I've been following this since 2008, starting in Hong Kong and Beijing, and I'll explain why in a second. Right? And I say modestly that I've been following this almost like an anthropologist, day by day, tracking the evolution and the global spread of the use of this currency. And a lot of the research that I've done has been meeting with central bankers around the world, China, Hong Kong, Taiwan, Singapore, Japan, Korea, Malaysia, Singapore, England, Frankfurt, ECB, Germany. And I've talked to central bankers as well, South Africa, India, the BRICS countries, and in Latin America and Africa. And also finance ministry officials to really get a sense of the partners in this process. What's going on? So if we think about it from a political science standpoint, as China as being the kind of the lead driver in this process, and then you have these other so-called follower states or partners in this process, I've really tried to get at this interaction. Right? Because in order for the renminbi to be internationalized, it has to be accepted globally, internationally, which means it can't just all be done by China. It needs others to buy in. Right? And so this is one of the most interesting, this is one way to look at the question of China's growing global profile and influence. Right? A lot of China studies historically has been inside China. Right? I would say this is part of the new wave of China studies, how China's reshaping the global, right? Gradually, incrementally. Right? China as this global actor. And yes, and we can see it on a number of fronts. Development assistance, China's a donor, financier, creditor, China moving money around the world, and in this case, China moving its own money around the world, right? Its own currency, with the help of others. And so what I've been really focusing in on is the question of how to study this process of renminbi internationalization as a process. Right? How is it that the scholarship has framed this question, the predominant scholarship? A lot of it has been driven out of the United States, often by economists, and often the question is, will the renminbi replace the dollar as the supreme currency in the world? In other words, China threat. My own research is different from that approach. It basically suggests that that way of framing the question really doesn't get at the detail of this evolving process. Who are the key actors involved? Right? What are the key processes? What are the obstacles? To what degree are the Chinese and their partners able to overcome the obstacles that are in the way? Right? So the detailed process tracing, right? Getting at agency, structure, and really asking the question of the rise of the renminbi as an international currency, as the idea of international currency development, or the formation of an international currency. In this way, kind of share something with sociology. Right? It's the idea that international currencies can be thought of as having a life cycle, a rise, a maturation, a decline. And even within my own area of specialty in political science, political economy, IPE, most of the research on international currencies has in fact extrapolated from cases where the currency is either in decline, sterling, or the case of the dollar, a mature currency, already having achieved international currency standing and acceptance. And then the question, of course, is the dollar on the decline? But very few people have actually studied the rise of international currencies. What goes into the making of an international currency? And this is where some scholarship now, in fact, some of the, I would say, the more thoughtful American scholarship is starting to do the comparison between the rise of the US dollar and the rise of the renminbi. Colleagues such as Benjamin Cohen are now comparing starting to go back to look at the rise of the dollar, the rise of sterling, the rise of the yen, the rise of the Deutschmark, the rise of the euro. Because the dynamics in this period appear to be somewhat different than what it, what's the role of the state? What's the relationship between the state and markets? Right? It's one thing when the currency already has broad global acceptance and corporations around the world and investors and traders are already using it. Right? Then you can say, yes, a market-driven process. Right? And many people hold the renminbi up now to this question. Does it look like that? Well, of course it doesn't. Right? It's a period on the rise in which the state and the market relationship is much more complicated. Right? In the fostering of the status and profile and standing and acceptance of that currency internationally. Right? So my research has really tried to drill into the detail of that with some historical comparison and also with some interesting comparisons where colleagues have challenged me and said, well, Japan looked well poised, right? The yen, 1970s, 1980s, 1990s, Japan was very strong. Japanese tried to internationalize the yen. If Japan only had either partial success or maybe even failure, why should we expect anything different from China and the Renminbi internationalization? Right? And part of this is because it is early days research. This is part of the so what question. Why should we care about your work, Greg? Right? If it's so early, well, maybe we should wait 10 more years before we do this research. And part of what I'm suggesting here from a comparative standpoint is China is different than Japan. And the relationships, the political dynamics, the relationship between state and market, if you go into the details of what constrained yen internationalization, what prevented Japan from going further, part of it was on the Japanese side, their own political will, their own commitment to pushing the internationalization of the yen when they were strong. They kind of halfway did it. They didn't have full buy-in. In the case of China, and there's a number of reasons for that, including geostrategic, not only economic, but economic was key too. China's different. And I would say China's is positioned in some interesting ways very different than in the Japanese case, both from a domestic political economy standpoint. The relationship between the Chinese Communist Party and the Chinese state banks and the Chinese state enterprises is different than in the Keiretsu. We thought of the Keiretsu as too much state. In fact, the Keiretsu may have been not enough state for yen internationalization in the early stages. So this requires us, the China story, requires us to step outside of our assumptions, many of the assumptions that we've drawn our modeling from, right, is what is the norm for studying the internationalization of the currency? And ask the question, how is China similar and different than these other cases? But I suppose what I'm suggesting here ultimately is if the Chinese can pull this off with the partners, and this is where timing is very important. The subtitle is Why Geography and Timing Matters. Right? Part of this is asking the question, what were the partners who now have signed up for Renminbi internationalization now? What were they doing 20, 30 years ago when Japan kind of tried? What were the Europeans thinking about back then? What's different now? Why are they so interested now compared to 20, 30 years ago? What was going on in Europe? What was going on in Asia? How much did the Southeast Asian countries buy into the idea that Japan was really willing to try to internationalize its currency at the expense of the dollar versus how they perceive China's role in the region now? I would say very different. Right? And so the United States remains important. However, there are some, I think, important differences. And so my own research very much has been focusing on some of these key kind of renminbi internationalization's process, life cycle of an international currency, rise, maturation, decline, and really focusing on the rise. And this intersection of international political economy and comparative political economy. Right? The international comparative IPE is the more global systemic questions about enabling conditions at the global, in the global context. And then the comparative political economy is this comparison of the Chinese domestic political relationship, state and market, compared to others. One thing that I would suggest, and this is where the comparisons with the U.S. dollar, I think, are very important, because here we have to go back 100 years ago to the time when the U.S. dollar wasn't really an international currency yet. And there, if you look at the work of people such as Lawrence Braz, you see the important work, the role of the U.S. Federal Reserve in helping to displace sterling and position the U.S. dollar for more use internationally. Right? People like Barry Eichengreen have looked at the role of the U.S. Federal Reserve in backstopping bank acceptances. Right? And this was all part of the United States post-World War II. Becoming a global player, a global actor, right? It was the internationalization of its currency, displacing sterling, right? And so part of my research looks into those details. Excuse me for a little bit, I'll go into somewhat technical discussions, but I hopefully will be, for me, intelligible. So part of thinking through this issue of the renminbi becoming an international currency is asking, well, what is an international currency? Right, what are the main functions of an international currency? And here I draw from international economists who study money and finance, as well as international political economy. We think of an international currency as usually serving three main functions. One, medium of exchange, right, so trade currency. Two, store of value, investment currency. And three, unit of account, so currency that's used for pricing, for example, oil, major commodities in the world, but also pricing. And this is where these three functions also have what could be called official and non-official, or government and corporate actor roles. Right? So medium of exchange, right, you would think of as the trade between market actors, right? To the degree they use that currency, right, then you see the role of that currency as an international currency, as a medium of exchange. Behind it is a central bank who has to help backstop those trade transactions to ensure that they don't have a balance of payments problem, right, at the national level, at the macro level, right? But there's one function, medium of exchange, trade currency. Second, store of value. That's the idea of bonds, right, stocks, equities, commodities, commodity futures. Sorry, that would be stocks and bonds in particular, right, where China or Chinese corporations or foreign companies, or in the case of Bank of England and the British Columbia government, has issued renminbi bonds. Right, so bonds denominated in renminbi. So it could be both private and public actors. But as store of value, it can be investment tool for companies, traders, investors, but also as reserve currency for official use, for official purposes. Right? And the third, unit of account, that's where we're looking at things such as oil pricing, commodities pricing, commodity futures, as well as the idea, from an official standpoint, anchor currency, exchange rate management, right, between central banks. Right? And this is where what's so interesting is we can see the renminbi gaining status and use in all of these three functions, though to varying degrees. Right? And more in some cases than in others. And most people say right now the renminbi is somewhere between a trading currency and an investment currency. Right? It's more or less established itself now, its role within trade transactions. Right? Of course, it's behind the U.S. dollar quite far, right, as a medium of exchange. But it's already, there's a significant number 7 in the world, ranked probably based on the best data we have as a trading currency, and where it's really still a very small amount of the world's trade is settled in renminbi. So the growth potential is enormous. Like China's own trade is 11% of world trade. And in the total amount of world trade, the renminbi is only 0.5% is settled in renminbi. So you can see there's enormous kind of what the economists would call fundamentals that could be working on behalf of driving demand for renminbi transactions in trade settlement. let me move on a little bit. Part of the challenge in studying something like Renminbi internationalization is there's a lot of micro detail. And how do you arrange the kind of forest from the trees on this one? And especially where it's a moving target, every couple of days there's a new announcement, and new data, new information, new regulation comes out. You know, and the Chinese have just allowed this to happen. The Chinese announced that over there with England, or so every day something new comes up. So as a scholar, so you don't get totally lost in all this. You have to somehow come up with some themes, or some way to. You have to figure out what we might call the analytics. Like, what are the analytics around which we organize our information, right? And so one way, and the way I've approached this now for the book, is to think through what are the main determinants of an international currency. So I just talked about the three main functions, but what are the main determinants? Am I doing bad on time, Randy?
Good. You're,
okay.
You're 20 minutes in.
Okay.
Another 15 minutes or so.
Okay, thanks. So 5 economists who work on this tend to think of 5 main determinants for an international currency. One is the weight of that economy, the national economy, linked to that currency. So this is where China's GDP, relative GDP in the world, becomes really important. The bigger size matters, in other words. The second thing is the share of world trade and expected rate of growth moving into the future. Right, so this is number 2 determinant. And China has 11%, #1 trading power in the world now. And expected rate of growth, assuming things don't get crazy in China, is that it's still going to be sustained growth, even if it's not 12%, still somewhere between 6-7% for the next little while. Third is liquidity, right? Deep and liquid, easy to access the currency internationally and in the domestic market of China. Fourth is confidence. Now, this doesn't sound so economics. Right? It sounds more psychological to me, but confidence. The idea is perception from the outside. How do traders and investors feel confident in using your currency? Right? Holding your currency, using your currency. And this, again, is where some interesting things come, because political scientists, conventionally, when we think of dollar and sterling, we tend to think of certain political arrangements going along with this confidence. Right? Independent central bank. A constitutional arrangement where property is protected. Right? A certain degree of democratic input in decision making. Right? These are seen as transparency, predictability, certainty. Right? These are somehow seen as political enabling conditions that are important as well from a confidence building standpoint. Right? And those who are skeptical of Renminbi internationalization often say, well, China doesn't look like any of these things that we just mentioned. And yet, they have achieved a certain amount of internationalization of the renminbi. So it throws up, again, questions for conventional academic understanding. Right? And I'll come to this again. Is the Chinese central bank as weak as we often assume? Or in fact, is it stronger, even though it may not be fully independent? Right? And what do we mean by central bank independence anyways? Is it really a U.S. Federal Reserve? I mean, the Bundesbank is ultimately, you could argue, the most independent central bank. Right? So there's a lot of ambiguity. How important is that independence of the central bank point? Right? But this is often read into as being enabling condition. The 5th determinant is transactional networks. Right? Paul Krugman has talked about this, the idea of you already have established trade networks and where people are using that currency already. So the dollar has incumbency advantages, right? The inertia that works in the favor of the dollar. I would say if we put aside weight and trade, share, and expected economic growth, my own research is focused on, in particular, liquidity, confidence, and transactional networks. And in particular, the role of the Chinese state, and especially the Central Bank of China, the actions they've taken, supported by the leaders of China, to develop offshore liquidity of the renminbi. Right? So one of the most interesting things is how China has actually actively gone about creating a pool of offshore renminbi, which now amounts to about 1.5 trillion renminbi, and new financial products which allow a bridging effect between offshore to move back to onshore. Right? And these are called RQFI and RQDII. You know, if you want, I can go into the details, but these are basically products that allow a portion of that offshore renminbi liquidity to be invested and to move back onshore into financial markets inside China. Because part of this is understanding the story that China has maintained currency controls, right, between the onshore and the offshore. Right? So this, again, is something completely different. To what degree the Chinese, because in the case of the dollar, the Americans had removed a lot of these capital controls so that onshore and offshore could flow fairly easily. China has maintained a significant amount of capital controls, right, in order to maintain control on money supply domestically and to prevent inflation and to prevent dangerous, volatile cross-border flows, both hot money going out or hot money flowing in, right, or speculative money, capital flight going out, hot money flowing in. Right? So the Chinese authorities have wanted to maintain up until now. They're talking about liberalizing some of these, right? But this is also part of the complexity of this situation. Hong Kong played a very key role in the early creation of this offshore renminbi market, and out of that 1.5 trillion, about 1 trillion of the deposits are in Hong Kong. Now, the question is Hong Kong inside or outside of China? This is a very interesting debate. Is it truly offshore? Right? Even people in the Central Bank of China have questioned, is this really offshore? Or is this offshore, kind of onshore, right? But now we also see large deposits in Taiwan. This is one of the most interesting things, because the amount of business that's done across straits between China and Taiwan, Taiwanese businessmen, I think, had lots of Chinese renminbi literally in suitcases or in their mattresses in Taiwan. And so, this is being recorded, so I'm being somewhat joking here when I'm saying this. But the idea here is that once China, Beijing, and Taipei agreed to allow Taiwan to become involved in this, all of a sudden, the bank deposits of renminbi in the banks of Taiwan shot up. Right? Very interesting. So here you have, and then Singapore, London, right, are other places where you see large amounts of renminbi deposits now emerging. The other thing, though, is liquidity. The other elements that are important here in ensuring liquidity is central bank to central bank agreements, so-called currency swap agreements. So when a currency swap agreement is signed, right, and Canada signed one with China not too long ago, actually, it means the Bank of Canada can now access the Bank of China's supply of renminbi in a case of emergency if we need it. Right? If all of a sudden we get involved in Renminbi Internationalization, and because of capital controls or limited deposit base of renminbi, and all of a sudden there's a huge demand for renminbi in these Canadian transactions, and we don't have enough renminbi access, the Bank of Canada can step in and access the renminbi in China, and it'll come. Right? So this is the idea. So this is, and this amount, if I remember my statistics correctly, is about 600 billion renminbi. Right? So there's another part of, you could say de facto, is part of the offshore arrangement. Banks, though, have said to me when I talk to them in London and elsewhere, emerging market banks, they said, through financial product innovation, we can also help create liquidity, right? Through derivatives and other types of financial, but this makes the Chinese government uncomfortable, right? Like, how far do they want to allow that type of financial innovation? But it can be done. It does carry risk, though, right? And one of the interesting things is if China doesn't liberalize more onshore, will it allow this type of liberalization offshore, to the offshore pool, right? To allow, and so this is very interesting. But these clever bankers they say they can do. They could create another pool, although it cannot supplant the other, real deposits and the currency swap. And there's limits how far they want to push it to. It's very, so you can see, in all of this, you see how both market actors, depositors, the state has played a role in creating this offshore pool of RMB liquidity. Confidence. Actually, you know what? I'll talk next about transactional networks, then I'll come to confidence. Okay, Randy? Well, I've got 5 minutes. Maybe you tell me? Okay. Transactional networks, very important. Here we also see where the Central Bank of China, starting with the Hong Kong Monetary Authority, created what's called the e-infrastructure. In order to do these payments internationally, you have to have plumbing and like bank-to-bank transactions that eventually link all the way back to the Central Bank of China. The so-called clearing arrangements, right? Offshore clearing and payment systems. And Hong Kong played a very important pioneering role. I was fortunate enough to talk to the people in the infrastructure department in Hong Kong, but how they adopted the Hong Kong payment system to be able to conduct these renminbi transactions back into China, and how they worked with their counterparts on the Chinese side to put together the e-infrastructure, electronic infrastructure to make this happen. And this actually should not be underestimated. This is really important stuff, because banks that sign up, and this really ensures the efficiency of the movement, the efficiency of the transactions, because business people are not going to want to be inhibited by inefficient transactions. Right? So the ability to clear within a day or clear within a certain number of hours becomes really important from a market-driven standpoint. And so China has invested, and this is where its relationships with central banks around the world become very important, because it's ensuring that the payment systems around the world all can get integrated in certain ways, right? And then China, the People's Bank of China, has appointed what they call a renminbi clearing bank, right? A specially appointed bank that's supposed to handle all these it's the focal point that handles these transactions. So in the case of Hong Kong, the first one was Bank of China, Hong Kong. Taipei was Bank of China. Singapore, Industrial Commercial Bank of China. That's when they broke the monopoly, added a second Chinese bank to the system. London, it's China Construction Bank. Frankfurt, it's Bank of China again. Right? In Seoul, China Merchants Bank. Interesting, right, Jeremy? Yeah. My understanding in Toronto, maybe I won't say. It'll be announced at some point. Maybe people know already. I mean, the rumor is it's ICBC. So you can see, and I've written a paper that kind of gets at, if you're the Central Bank of China, can you imagine kind of trying to divide up the world and figure out which of these banks, is where? Because you also want them to compete with each other, but and so you don't want to create a monopoly situation either. So it's very interesting. And so they've gotten involved in that. But the second thing about transactional networks, which I think is quite important, and Japan never, I don't think, got to this point, is if you look at diversification of trade relations so that you can then build your currency use into it, China's relations with Africa and Latin America become really important, especially for what's called third-party use. In other words, between Zambia and Zaire, or South Africa and Mozambique, right, where Chinese are not directly involved, when they start conducting their trade with each other and use the renminbi as the dollar is used, that is really when it starts taking off as an international currency. So far, most of the transactions are where a Chinese trader or investor is directly involved in the transaction. But this is where reversing dollar inertia is more challenging, perhaps even within Asia to some degree, although a lot of headway is being made, Europe and obviously with the United States. Right? But in Latin America and Africa, arguably when China now is the #1 trading partner for many of these countries, and they're going to be doing trade with China anyways, then what's the cost? Right? As long as the Chinese currency is stable or appreciating in value, what's the cost? Right? In beginning to settle some of their trade with each other. 5 minutes? Okay, thanks, Randy. Last point. And this is where timing and how geography, so that's part of how geography matters, how timing matters. Confidence. Already I've alluded to the fact that China may in fact give us cause to rethink many of the political assumptions that we have about what are the enabling conditions to make us feel safe in accepting a currency. But one of the things I think is most interesting, if we compare yen internationalization 20, 30 years ago and renminbi internationalization now. If we look at Europe, in the last year, Frankfurt, Paris, Zurich, Luxembourg have all joined up eagerly to become involved in renminbi internationalization. And of course, London, UK, outside the Eurozone, but part of the European Commission, and linked, obviously, closely to the European markets. 20, 30 years ago, were they as interested in yen internationalization? 20, 30 years ago, they were helping to launch the Eurozone. They were preoccupied with their own agenda of European financial monetary integration. Fast forward 20, 30 years, 2011, 2012, China helps stabilize the Eurozone by promising to buy European stability funds, by holding country debt, Greece, Portugal, Ireland. The Chinese never tell us how much they're holding, but they indicated they were holding. They helped, in other words, stabilize the euro through a very difficult time. And one of the most interesting parts of my research in the last year has been then visiting the European capitals. And you can see, before Xi Jinping or Li Keqiang, whenever they arrive, Angela Merkel, we appreciate the steady support that China gave to the Eurozone. And therefore, we ensure that Frankfurt will play an important role in renminbi internationalization. It sounds like diplomatic quid pro quo. It probably isn't quite that neat, but you do see correlation, if not causation, that I think is difficult to ignore. When the Europeans kind of have, as they come through their crisis, I think they are now realizing that they and China share a desire to see a more multipolar currency, global currency scenario. Right? So it's very interesting. If you're in the United States, you can now see UK, David Cameron, George Osborne have jumped. They are fully, involved. They have London fully involved in renminbi internationalization. Paris, same thing. Luxembourg and the others. Inside Asia, we also see the ASEAN countries, Malaysia at the forefront, but Singapore as well. Right? Singapore said, we commit early to this. Right? Even though geopolitically, there's still a desire to keep the Americans involved in balancing within Asia, economically, they see, in their view, where the future, how it's going to evolve. Korea, even Japan. Right? Christmas Day 2011, Japan and China sign a currency cooperation pact. This goes into hiatus, frozen basically, over the island dispute. But just last November, the trilateral meetings of the finance ministers between Japan, China, and South Korea resumed meeting again, around just before the awkward handshake between Xi Jinping and Shinzo Abe at APEC 2014, right? November 2014. When I talked to officials in Japan at the finance ministry, they said to me, and I'll end here maybe, unless something drastically goes wrong in China, the reality is Japan is going to be living beside the world's largest economy. What choice do we have? Right? We have to figure it out. And the finance ministry of Japan actually manages the foreign currency reserve for Japan too. And they have been looking to do more yen internationalization and renminbi internationalization, kind of how to figure out how to work together. So beyond the disputes, right, there's a kind of structural dimension that's pushing this forward. But then you add the diplomacy on top of it all, very interesting. Maybe I'll stop there, Randy.
All right, well, thank you very much, Greg.